I think the lesson of Bitcoin is the best asset. There is no second best asset. Buy Bitcoin. Keep buying Bitcoin. Don't sell the Bitcoin. Ignore the noise.
Wait a minute, everyone. Welcome to Bitcoin Zella, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoin Zella offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoin Zella. Subscribe now. In today's video, Saylor predicts that Bitcoin ETF will skyrocket Bitcoin price to break $100,000 this year and more. Why he thinks that Spot Bitcoin ETF open a world of opportunity and functionality. So without wasting any time, let's dive into the video.
I expected the ETF launch to be successful, but I think it's quite impressive just how successful it's been. At this point, we can see that these ETFs are going to surpass gold ETFs in not too long a time. The Bitcoin ETFs are the most successful ETF launch in 30 years, and apparently in the first 30 days, they outperformed every other ETF. They've crawled to the top of 3,500 competitors in short order. And I think that they have sparked the bull run and the upward movement in the price. I mean, definitely there's a huge amount of institutional capital flowing into Bitcoin right now that is driving the price because of asset scarcity. I think the most important thing or the most important result of this is the ETFs themselves represent regulatory clarity for Bitcoin as the institutional grade crypto asset. I think that's a very important thing. I think secondarily, the ETFs represent an on-ramp for institutional money, and they open up a gateway between $100 trillion or more of institutional money and Bitcoin. I think the third thing is they have sparked this price action, and as Bitcoin moves back toward its all-time high, they have generated an extraordinary amount of media coverage and Wall Street awareness, and Bitcoin benefits from the awareness of the asset class because as of now, 99% of the mainstream investors really have an incomplete understanding of Bitcoin, and the best thing that we could do is just build awareness that it is an asset class, and then people will start to do the work to understand what it is. And so all three of those things have been catalyzed over the past month by these ETF launches.
Bill Ackman, the renowned hedge fund manager, recently suggested that he might invest in Bitcoin, citing its potential for a significant price increase. Ackman painted a scenario where the rising price of Bitcoin could lead to increased mining activity, thus driving up energy costs, causing inflation to rise and weakening the dollar. This cycle, he argues, could lead to an ever-increasing demand for Bitcoin and energy. That being said, he also cautions that the opposite could be the case. Ackman's initial support came at a time when the crypto industry was under intense scrutiny due to high-profile failures like the bankruptcy of Sam Bankman-Fried's FTX. He praised Helium and Demo for their potential societal benefits. However, subsequent investigations revealed discrepancies in Helium's operations, leading to a significant backlash against Ackman. Critics pointed out Helium's overstated claims and financial discrepancies, causing Ackman to clarify his position, stating that his intent was to discuss the broader utility of crypto and tokenization for business, rather than promoting specific tokens. Prominent Bitcoin proponents were quick to weigh in. Prominent investor Anthony Scaramucci advised Ackman to delve deeper into the dynamics of Bitcoin mining. He argues that miners typically utilize low-cost, underutilized energy sources, which prevents them from driving up energy prices. Meanwhile, Saylor, a prominent advocate for Bitcoin, encouraged Ackman to invest in the cryptocurrency, not for the reasons he outlined, but because of its potential to reduce electricity costs for other consumers. Saylor offered to discuss the matter further.
If someone studies Bitcoin for an hour, then they will watch the news for 1,000 days, and they will have 87 moments of anxiety during which they'll sell the Bitcoin. And so Bitcoin has a lot of those people. Like, they heard someone say buy it, and then they buy it. But if you would buy it because someone said it's a good idea, then you would sell it because someone said it was a bad idea, because you're not making your own decision. You're basically reacting to the crowd or sentiment or emotion. So a lot of people make investments based upon a recommendation from somebody else. And in the non-Bitcoin world, that's almost essential, because there's 10,000 stocks. Most people don't study. How many people spend 100 hours studying each of the S&P 500 stocks? Nobody. Okay, so if you own one of them, how many people spend 100 hours studying one stock that they own? 98% of people don't spend 100 hours studying the one stock. The stock analyst, the person that covers Apple, they spend 100 hours, and everybody else kind of outsources the thinking to that person and says the analyst put a buy rating on it, so I'll go ahead and take their recommendation, I'll buy the stock. And when the analyst puts a sell rating on it, they sell the stock. And, that's understandable in the 20th century economy, because in a world where you have to sift through 100,000 different investment ideas to figure out what to buy and sell, you can't possibly do it. A dentist doesn't have time to sift through 100,000 things. Okay, why do you have to sift through 100,000 different things in order to actually avoid losing all your money? And that's because the money's broken. Okay, so in a world where the money is broken, where there isn't a money where you can just buy the money and wait forever and have it go up, in that world, you're an investor and you're running your own hedge fund. And of course, most people don't have the time to run their own hedge fund, so they're the worst of all worlds. They're taking the risk of a hedge fund, but they're not putting the effort in to run a hedge fund. And even if they did, how many 65-year-old retirees, have the ability to do stock analysis on 500 different stocks? Like, I would argue almost none of them. So in this particular case, Bitcoin is a new asset class. It's digital money. Once you understand it's digital money, and you probably get there somewhere between 100 hours and 1,000 hours. Once you understand it's digital money, then you realize that the strategy is you just buy it and keep buying it, and don't sell it until you have to pay a medical bill, or until it's an urgent life or death matter where you just have to sell it. But otherwise, you just keep accumulating, and you wait for all of the chaos and entropy and inefficiency and disorder that undermines every other asset to take hold. The longer the time goes on, the more difficult and the more disorder there is, and the more people appreciate the value of good money. So I wasn't bothered by the volatility. I was just waiting, for nature to right itself. And I think that the biggest mistake you can make is become insecure. Is it money? Is it not money? Right? Once you've made your decision, you're committed, then you're just thinking, if the price is low, that means I get to buy more.
That's right.
Trader Gert van Leyten has ignited conversations among traders with his analysis, suggesting that Bitcoin reaching $200,000 is not only possible but could be on the horizon sooner than most anticipate. As we dissect the Bitcoin chart provided, the previous patterns of Bitcoin's performance post all-time high ATH indicate a startling trend. The price has a history of doubling within periods ranging from as short as 10 days to as long as 84 days. The current Bitcoin market trajectory on the chart showcases a strong bullish pattern, with the cryptocurrency emerging from a consolidation phase known as the struggle period. This phase, characterized by a tightening range of highs and lows forming a converging pattern, typically precedes a significant breakout. Bitcoin's recent print of an ATH is a critical development. Historically, such milestones have been succeeded by aggressive bull runs, as indicated by Van Leyten's analysis. The chart highlights a structured market recovery following the struggle phase, leading to new highs. It is this pattern that reinforces the trader's hypothesis that a move toward the $200,000 mark before the next Bitcoin halving an event that historically impacts supply and demand dynamics, is becoming increasingly plausible. Examining the current Bitcoin chart specifics, the support level at $41,000 stands firm, having been tested and held multiple times, signifying a solid base for the cryptocurrency's valuation. In terms of resistance, Bitcoin is challenging upper bounds, with the psychological barrier of $100,000 being the next notable milestone. Breaking above this level could potentially trigger a parabolic move, supported by the historical priced action that follows ATH breakouts. Under the present circumstances, if Bitcoin continues to follow the historical doubling pattern post-ATH, the argument for a $200,000 price point becomes compelling. This scenario hinges on several factors, including sustained institutional adoption and favorable regulatory developments. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.